Hey guys, so welcome back to my channel. Today we're going to discuss about a few recovery stocks that I personally am not going to invest in, and I really wish you guys wouldn't do either, because while they seem like such a good idea and bargain, because a recovery stock is pretty much a stock that kind of plummeted after the pandemic, and then everybody thinks after we finish with this pandemic they will come back up. I think you guys need to kind of take a few, considerations in mind that we will never go back to the same as we were before. And in this video, I'm going to kind of explain you guys which stocks kind of fall under this area and I think the reasons behind my logic. So I want to start with the cause and then we'll go to the stocks that I would suggest not to buy. And you could sum it up with an acronym and it's WFH, working from home. And you have to think about this in this way. All companies now, all businesses are kind of promoting working from home. So employers are not asking their employees to go to work. They're not asking them to travel around the world. You can see that businesses worked quite well from having pretty much Zoom calls or WebEx calls or whatever type of video conference you want. And they figured out that people are working a lot better in the comfort of their own home. And this is has a big impact downstream on a few recovery stocks that I'm going to show you in the next chapter. So the stocks that I wouldn't touch are the airline stocks, the car manufacturing stocks, and any stocks that own office buildings, like commercial office buildings that are for rent. These ones I wouldn't touch, and anything that's kind of indirectly linked to these. So companies that actually produce airlines or teach airline pilots or anything that's kind of linked to these three areas I wouldn't touch. And I'll explain each one individually. So when it comes to the airline companies, that's pretty straightforward to you understand. So if you think about this, the airline companies make money when people travel, but you could easily say, well, after we go out of the pandemic, yeah, people will start going on holidays, and I would have no problem saying yes to that. But when it comes to normal people going on holiday, airline companies don't make any money on this. So if you check online, it's called CASM, and it's just a number, and it's an acronym for cost average per seat mile. So that's pretty much saying how much the companies need to charge per seat per mile for them to break even. And this number, I've been doing a bit of research online, is between 10 and 15 cents per mile. And then take this number into account, right? So you think you want to go from point A to point B, you choose an airline and you see how much you find the cheapest one, of course, and you book it. See how much money they make. Virtually not much. So airlines pretty much make their profit from business and first class. And guess what? Who do you think goes on business or first class? Of course, there are going to be some people who travel for their holidays like that, but I could say 90% of these people work for a business, and that company or business send them to travel via business or first class. So going back to what I said at the beginning, because companies now see that it's so effective to do business and sort out their things via like a video conference, imagine that all these profits are going to go out the window. So when you saw at the beginning of the pandemic, like the stocks going down, and now you're thinking maybe it's a good time now to buy because people go on holiday, pandemic's going to open, I guess companies are, not companies, apologies, countries are going to open their doors for holidays. That's not where the money is. And I think companies, once they figured out like, hey, we could do business via video or teleconference or whatever, why should we pay this exorbitant amount of money for our employees to travel when we could reduce this cost and get an even bigger profit margin? So keep this in mind. I wouldn't touch any aviation stock whatsoever. Now the second one is office buildings, and that's even in my case. I haven't been physically to work uh, in the last year and a half, and I don't think that's going to change anytime soon. And maybe most people that work in a corporate job are in the same shoes. So office buildings are normally rented out for companies, and again, they figured out, why should we bring employees home if they did such a great job working from home? And you have to think about this. Before the pandemic, working from home was considered a privilege, a kind of a luxury, right? But now people got used to this environment, so they're not going to give this one up so easily. And also, if the employer sees that the person is doing such a great job, why should I bring him to work? And he's thinking, well, maybe I could save money on the rent I'm paying for this office building. Let's reduce it maybe to 40% or 30%. Or if I own this building, well, let's reduce my staff and then try to bring some other companies that they're reducing their numbers. So office buildings and everything that's related to office buildings, maybe companies that clean them, maintain them, these will also reduce, and I don't think they're coming back. So even if you're an investor and you are literally looking to buy an office building to rent out to other companies, I think, to be fair, your money is going to be spent much better in a different location. And the last one is the car manufacturing stocks. Again, Tesla is something different, and I don't want to say anything about Tesla because it's not really a car company. I kind of consider Tesla as a data mining company. But the general other stocks, when it comes to car manufacturing, again, I wouldn't invest in this because previously, as we said, we're going to move in an area where people are going to work from home a lot more than we used to be. So taking my example, like I used to do per year around 20,000 miles just from my place to work and again. But now I don't think this year I didn't do more than 3,000 miles. And that makes a lot of difference for everybody else. I have friends that they're saying, I'm thinking of selling my second car because we don't really use them that much. So if you think about it, people are not going to drive as much. That means their cars will last longer. That means they won't swap their cars for a newer model because they don't need to. They're going to reduce their bill on fuel and on servicing. So anything that's adjacent to this, especially the servicing companies, the aftermarket part companies, you name it. I hope I'm not sending an impression that I'm like a great financial analyst or anything like that. But in my opinion, this is common sense again for these. I used to drive a lot and I'm not driving that much now. My friends are thinking to sell their car or their second car because they don't need it. So again, this is an area where if you think a car company just plummeted during the pandemic and you thinking now it's time for it to rise again, I wouldn't invest my money on it because there are definitely some other areas that again might appreciate a lot faster. Thank you so much guys for your patience. Again, I'm not a financial advisor. This is just the way I invest and I guess the way I use my common sense when going into a stock. What I would suggest you guys is at least double, triple check if you want to go into these type of stocks and have a business plan and logic behind it. But I guess there's no way sugarcoating this. The way it used to be is going to be a lot different from the things that are going to progress from now. So working from home, I think, is going to be a new norm for all corporations and all businesses that could accept this. And this will have a negative impact on some stocks and it will have a really great impact on different stocks. But again, I hope this was useful and have a great day, guys, and stay safe.